Hey folks, Nick here. Looking over a trade. Somebody in the chat room was kind enough to share their mistake, or at least their losing trade. It happens. They're brave enough to share it. I do appreciate it. It was an ARKK, and the method they chose to trade it was the options markets. But the concept extends to any method, really, any style of trading. Believe it or not, the homework is still the same, regardless of how one person trades. Point of entry and exit is if it's a good idea to chase it up or not. Doesn't depend on how you trade it. Some people like to buy stocks, other people like to sell puts and put spreads, or buy calls or call spreads. So I will share the method that they chose and I will comment on it, but I think the lesson from it is manyfold. First of which, where to place the risk. That's a big mistake starting out. So the setup was wrong. Also, where to adjust the risk and where to give up on the risk, and where to double down and what to do with it on the pop, and a desperation effort at the end. So there were a few good things in there, but there were some very consistent mistakes that I see all the time. I've done them. I still do them every once in a while. So here's what happens. So ARKK is a momentum stock, meaning it moves fast because of the names in it. Tesla's in it. It's about 11% of it. It's ARK Invest who are now famous for picking the win on Tesla. I made fun of the lady who started it years ago, and I ate my words because she said Tesla's going to 4,000. I was like, what are you smoking? So it turns out that she was right, and I was not smoking the stuff she was, and I should have been. But nevertheless, in the long term, their aggressive style is untested in a bearish scenario, but kudos, they got it right. So somebody that wants to invest along with them has all the right to try to copy them. One way to do it is to buy one of their ETFs. ARKK is one of them. It is heavy. I mean, the top 10 are legitimate companies, and they account for about half of it. So it's a legitimate investment by any standard. The person that shared with me this trade, they bought calls, which is a bullish position if you don't know options. It's like buying stock. The only difference is you're on the clock. When you buy stock, you can wait forever for as long as you want to. When you buy calls, you're on the clock. And these calls expire this week, so they've had them for a while, since March. So the mistake the position was open on March 10th. They paid $6 for an asset. It was a call option up here. So first of all, there's the mistake, in my opinion. Not my choice to buy so high. Why? Because you not only have to guess the direction, up or down, you also have to guess the magnitude of the direction. You need a big move. And it has to slice through all this crap and the gap. Maybe the gap was the attraction, but you have to realize there's so much going on between that and the gap that it was too. I mean, look at this bounce. It was chasing off of the lows in March. That was a hideous correction. I did do the bounce as well, but I sold puts and put spreads on the way down, so I didn't need a rally. All I needed is to stop from falling. So the first setup is too high. The second thing was too much conviction. We've never had this scenario before. Right now, what's going on in the world? 6 trillion, 7, 5 trillion. I forgot. I lost count. How much stimulus money? Don't forget, you're going to say a number, but you probably didn't count that there's 1.4 trillion a year coming from the Fed behind the scenes in asset purchases, 120 billion a month. The tapering part that everybody's scared about. So it's artificial. We don't know what the hell's going on. So we have to temper our enthusiasm. How do I do that? By not buying naked calls. I should buy a call spread. Well, I can make less money. Well, what's wrong with turning $3 into 9 or 10? Nothing. There's no shame in that. So yeah, it'll be exciting to turn $3 into 20, but you have one bad day, boom, those dollars are gone. So they opened at 310. So the first two comments, mistakes / things to improve on: A, choose better location. B, be more moderate, less risky. Hedge your bet by doing a spread. It doesn't have to be a vertical spread. I can make a calendar spread, a diagonal spread, so it can still be leveraged quite a bit. Third is what happened next. They added on 315 and 317, too close together. So the first purchase was $6 and change. The second purchase was $5.80 and change. Right there, it tells you that nothing has changed, yet they added more to their position. And then the third add was at about $3.75. So they already got a big haircut on it. That was on $3.17 here. So then the next edition was on $3.21, 4 days later, for about the same price, $4. Again, two editions, $3.10, $3.15 were the same price. $3.17, $3.21 were about the same price. Too close together, both of them. All four of them too close together. And then $3.25 they added at $1.40. So this one was a disaster. See, a small drop, well, relatively small, blew up the account, the trade. Now they added more at $1.30. This is a buy I believe in as a buy as an entry all by itself. Why? The stock is falling into a prior support. The stock was rallying into a problem area. So falling into prior support, which was proven as support on a hideous test for the whole market in the NASDAQ. And back here, it was the breakout. Look, failed, breakout. It came back, tested it, came back. That's a place where I would sell puts and put spreads or get long with shares and tight stop. What's the tight stop? If this is gone, I don't know what's below, I'm out. So that's a tight stop. So recap, mistake, taking the place too high with too much conviction. That's two mistakes. Then timing is another issue. But this was a good timing. Give him kudos on this one. What I don't understand why on this they didn't offload, because this was a gift. You double down here or triple or 10. I don't know how many they did here, but if they doubled down here, this should have brought a lot of relief. And that would be, thank you, you unjammed me. I'm still red, but thank goodness it's not a complete. I'm like 30% down, 40% down, rather than all of it gone. They stuck to it. And worse, they added more in May for 14 cents and 5 cents. So it was desperation shot. So the last one was down here, which was a good entry point because, look, it's falling into position. But again, they chose the same level that is now way far out of reach. So how could I have done this differently if I did indeed take the same start? I would not have added too close together. That's one. I would have, if I doubled down here, I would have gotten out on the way up. That's two. Or I would have salvaged whatever value I had, because now the level they bought originally was too far to be realistic. I would take it off, and if I still wanted to be long, I would change the level of risk differently. So I did that today, in fact. Somebody to me, wow, I just remembered. Okay, thanks. You know who you are. I know you're watching. So today they came to me, oh my God, I made a mistake. I bought a stock yesterday. I forgot what it was. Wasn't Sage? I forgot. Anyway, they bought a stock yesterday based on a tip from a friend. Today it fell apart, the stock. So their investment is pretty much, they paid $2 and change, and two or four, let's say $2 and change, and now turned into like 70 cents in one day. So what do we do? I said, well, technically I had comments. It's falling into support, kind of like a situation like this. But I don't know how far the bounce will be, if it will come. And if it does come, it's going to have a resistance now because it has a ledge to deal with. So if you still believe in the stock, and I looked at the P&L, it was a healthy P&L, so it's definitely not Sage. And then, so I don't mind somebody wanting to be long at a lower level. So I said, if it was me, I would get rid of the calls, salvage the 70 cents, and then sell puts at $15 a share. That was an exact number. I can't remember the ticker now. I would sell a put at 15. It brought $1-ish, 95 cents to $1. So, and that would have been, if they give me the stock at 15, that's a gift, right? And a chance to recover whatever they lost up there. Now, what happens? All they need is nothing to happen, and they'll get back whole again, almost slightly red. Just if they do 1-to-1, and if they're willing to do 2-to-1, like own 200 shares versus 100 originally committed to, then it'll be a profit trade. So change the risk profile to adjust for the new level. In this case, if you believe in ARKK up here, then you should believe in ARKK down here or down here. I would have ditched the calls instead of adding calls and sold the put spread to where at least now time is my friend, not my enemy. I still have money at risk, but now I don't need anything to happen. I just need time to tick by. So that would have been a way I would have managed this. So many lessons here. Gosh, I can't remember what it was, but basically the start was wrong. The addition levels were wrong. The frequency of addition was wrong. I usually don't add to stock unless I have a big differential in price or a long time passing between the two. Because anyway, so those were two major things. What to do with the hope, and when the trade goes bad, you have to see, okay, where do I draw the line as far as stop loss? At some point, oof, I'm down 40%. I better get out and salvage whatever's left, or revisit the reason why they entered. So I said in the beginning, did I? Well, maybe they were chasing the breakout from here, so that's a legitimate breakout. But then that's a trade, not an investment. And if it's a trade, it should have a stop loss immediately. So many ways of slicing this. There's so much to say, but you get the gist of it. We have to learn from our mistakes. I'm so appreciative of this person sharing their experience, because now I got to share my opinion, so they're solidified for me as more truth, and maybe they have something to work with next time around. All right, so that's it. It wasn't to pick on ARKK. It wasn't to trade ARKK. It was just sharing a mistake or a situation that ended up being a mistake for somebody, and maybe helping them understand, like dissecting the play by play and looking at the video after the game to see if the next game can be better. Nick signing out.